Well, time to have a look at market news now. Even though we had a public holiday, we did have global markets continuing to trade, the rand continuing to trade, and it managed to beat 15 rand for probably the first time in 2 weeks. And a lot of people might think that the sentiment has to do with the local elections, but it's a lot more bigger than that. It's a lot more broader than that. The sentiment has to do with China. It's the concern around the Chinese property sector. We had the fourth property company saying that they might not be able to pay their debt commitments, and all of that has raised concern, and of course that has affected the precious metal prices. So we thought, in light of the elections, let's look back at how the rand has been performing. Right now we've just breached over 15, but let's go back to say 2011. 2011 was just around the time we had elections, and at the time the rand ended off the year on a horrible note. It was probably one of the worst performing emerging market currencies, right up in line with the Turkish lira. It started the year, believe you me, at 6 rand 57 and happened to close that year 8 rand 17, December 2011. But let's go back to another election period, that being 2016. At that particular point, the rand plummeting 16 rand 20 versus the dollar. It was a whole host of things. Again, the China story was coming through, but a lot of it had to do with some of our weak fundamentals. You may also remember there was a business confidence issue that was playing out at the same time, but also the selling was happening indiscriminately. During that period, we had a cabinet reshuffle where Minister Pravin Gordhan was appointed to be finance minister in that particular period. So a whole host of things were happening. Then we come to 2019, still an election period at that particular time. Rand was trading at 14.47, and again, it was the darkening growth outlook following power outages, much similar to where we are right now. At that particular time, Eskom instituting load shedding 9 days in a row, and we then had to have an emergency cabinet briefing where the outline was to see how they can actually solve the electricity problems. At the time, Eskom was dealing with debt sitting at around 450 billion rand. So it's quite interesting as we go back into these particular years to see what events were playing out and that contributed to where the rand was back at that particular time versus to where it is now. But to take the story a little bit forward and look at what other risk events do sit around the rand, especially as we go from elections into medium-term budget policy statement next week in MPC. We are joined by my market analyst at this particular point, Martin Smith, who is the portfolio manager at Anchor Capital. Martin, thank you so much for your time. I mean, how would you describe local market sentiment right now, taking into consideration what's happening globally and as well as, I suppose, election mood also playing out?
Yeah, so a couple of things to unpack there. I think we need to remember that we are basically where we were in kind of February, March this year already. So, I mean, we've basically gone sideways for the better part of, call it 6-7 months, which is quite interesting. So we've had really good returns year to date, but there's just been a lot of volatility in the last sort of 6 to 7 months. We've bounced back quite nicely. We were sold off quite aggressively in September along with other emerging markets. And we've bounced back quite nicely in kind of October and the beginning part of November. So that's all positive, but I think we're still trying to find direction. There's still a lot of things that are going on, specifically globally. Yes, you can talk to the fact that we've got a local election. Doesn't make such a big impact in terms of what the market is doing, unless there's a big event, probably not. But in terms of where we are at the moment, we're still trying to find our cues globally. What's happening with inflation, what's happening with interest rates, like you mentioned, what's happening with China. So again, I think it's one that's bounced nicely. We've made good money for the year, but trying to still trying to find some direction. And I think a lot of questions are going to be answered in the next couple of weeks.
I heard you talk about inflation, and I have to bring up this massive petrol price hike that South Africans will have to contend with from the stroke of midnight. Let's talk, broader picture around the Brent crude. How has that performed over the past couple of weeks?
So, I mean, it's no kind of secret that Brent has performed incredibly well in the last year or so. I mean, we are at kind of figures now that we haven't seen since 2018. So, I mean, we've seen very, very high Brent crude prices, and that's obviously had a very big impact on what petrol prices and diesel prices have done. And that's essentially going to be a tax down on South African consumers, right? Because this price is, like you mentioned, it's a very, very big and significant price that's consumers going to have to pay. You're going to see some inflationary pressures come through from that. So not positive for us from a GDP perspective. But if we look at what kind of oil is going to do going forward, I mean, you can never kind of predict that there are a lot of other factors. But if we look at kind of what the forward markets are saying, they're saying that it's going to be around $65 going forward. You've got US fracking that's coming online in probably the next 6 months or so. I mean, their break even is around $30 to $35 a barrel. So I think we will see lower oil prices. They are kind of inflated at this moment in time, but still, we need to wait for that to happen. At this moment in time, it's still going to put pressure on the SA consumer.
Right. So we went into this election with the background of the July unrest and various other things that were playing out in particular. But let's focus on that July unrest because part of it started in KZN, and we had a lot of our reporters talking about what is happening from a results point of view as we look at elections. But Massmart is the one that I want to talk about now because they've just given us an update to say when it comes to the replacement cost for property, for stock damages, as a result of that civil unrest in July, it's sitting at around 2.5 billion rand. And now my question then is, let's unpack Massmart in the context of everything they've gone through. What do you make of that stock?
Yeah, so I think we need to have the kind of investment case on the one side and obviously the civil unrest on the other side. And I think in terms of the investment case for Massmart, obviously it was incredibly sad that they have to have all these replacement costs and all of those things. But from an investment case perspective, we look at the numbers that came out and a bit of a mixed bag. And I'm not saying that because they have Builders Warehouse, but I mean, the Builders Warehouse numbers were okay. The wholesale numbers were actually quite good, but it's still the game numbers that are the big kind of negative factor with Massmart. So you've got two sides of the coin. You've got some analysts saying the stock is incredibly cheap and they're going to deliver on good earnings growth for the next 2-3 years. They're going to have a very nice bounce back and investors are going to make a lot of money. And then you've got the other side of the coin saying the businesses as a whole aren't performing kind of in line with the other peers, ShopRite and the like. And there's probably better opportunities from retailers. I tend to be on that side of the coin. I think I'd rather be in something like a ShopRite than something like a Massmart. But if they do deliver on the kind of earnings growth that some investors think they will do, then the stock is looking cheap and you will make a good return. But for my money and my clients' money, I'm happy to be sitting on the side.
So we're still, waiting for that the final results numbers to come out. But as we wrap up the week, next week we go into medium-term budget policy statement and various other events also unfolding in the global background. What are you keeping an eye on? Perhaps let's start off locally.
So locally, we've got the Reserve Bank that are going to be speaking about interest rates. And I mean, that's the big thing is what do? Do they start hiking? And you saw Brazil and Russia hike recently, and are they going to kind of go in line with the emerging markets? We think they might only do it kind of in January next year. We might have, call it a percentage worth of hikes for the year ahead. The market is probably pricing in 1.25% worth of interest rate hikes. So it's going to be interesting to see how that pans out. You've obviously got the Fed speaking later this week, and we'll hear about their tapering. So there's a lot of things that still need to play out from a kind of global interest rates, global inflation perspective. And I think that's going to be the big and key determinant for me in where markets end up for this year. So keeping a very, very close eye on it. Like I mentioned, you've obviously got these elections that are going ahead at this moment in time. While they are hugely important from a South African perspective, from a market perspective, like I mentioned, unless there's anything massively kind of left field, it's a little bit of a non-event.
All right. Thank you so much for your time. That is Martin Smith talking to us from Anchor Capital. He is the portfolio manager. The price of